I know that most of you like to see Forex setups. Today I've got a nice daily moving average cross strategy set up on the New Zealand Canadian pair. Don't miss it. Hi, this is Tim from TradingStrategyGuides.com. I told you guys that this is your channel and I would do whatever you wanted. Well, it appears that not too many of you are excited about a series on testing, so I'm going to pass on that one for now. I'm a little disappointed because I know how much testing can change the whole face of your trading, but I didn't even get half the number of comments I asked for, so I guess you guys are not ready to hear about it yet. Anyway, I'll keep watching the stats on that video, so it's not too late to register your vote. I'll put a link to the video below so you can like and comment on it if you're really interested in seeing a series on how I test my strategies. And with that said, I've got another special for you guys to see, but only if you're interested. Remember, this is your channel, but you've got to tell me what you want to see. I've got a shorter term London breakout strategy to show you. But it's not your dad's London breakout. It's got a great twist to it, and I'm really excited about it. You might actually find out that I've stayed up for London session to run this thing once in a while. If you want to see this, give me at least 150 likes and 50 comments on this video, and I'll know there are enough of you interested for me to do this thing. Today I've got a great setup on the New Zealand dollar Canadian dollar Forex pair. But first we've got a few charts to go over. Then later on, we'll go way back for today's trading maxim. It's my favorite day. Let's do it. Remember to click the subscribe button and hit that bell so you don't miss any of these great Forex setups. Okay, let's look at the open trades. The US dollar Mexican finally hit our target last week. Whew, finally. Closed half the trade for profit, moved my stop to break even right here on the second half. 190134-ish. You can see that I've turned the parabolic SAR on, and now we're just going to wait until it gets down below our break-even stop, and then we'll start following the stop on the PSAR just like we are on the Euro Swissy. And speaking of the Euro Swissy, it's still looking really good, pushing down hard. My current stop is at 108.12 to lock in 83 pips right here on this current PSAR point. The PSAR makes following the stop a lot less subjective than my prior method. I hope you guys find this easier. And gold closed about $1 above the triangle on Friday. So we're still good on this, and I'm still in this. It now has my permission to push on up and hit our target. Because the market always does what I want it to do, right? And if you believe that one, I've got some land down in Florida for sale. And this Bitcoin bullish wedge setup came really close to hitting our target last week, but pulled back, so we wait. Boston Beer triggered a buy ahead of Thursday's close at 385.80-ish. In Friday's video, I had a short clip from Casey Stubbs showing you this same trade using options, and we're going to keep track of that over the next few days as well. Our stop, of course, is 372.21. Target is 394.86. You can see that it opened gap up and pulled back a little bit on Friday, but it still closed above our entry. I showed you this platinum setup a couple of weeks ago and then reminded you of it Wednesday, but I failed to include my entry in Friday's video. I apologize for that. Platinum gave us a nice trigger on huge volume last Wednesday. Look at this volume, almost twice the average, or probably more than twice the average, actually. My entry was 1022.52. Stop loss is 990.14, and my first target 1044.11. Came kind of close. on Thursday, but no cigar. Still waiting for it to hit. And Boeing Inc., these poor guys just can't catch a break, can they? They had a huge down day on Friday. Again, close to twice the average volume. We are looking to sell a close below 320, so keep an eye on this one. You know, you guys keep asking for Forex Setup, so I'm looking for them first. Today it's the New Zealand dollar and the Canadian dollar pair. I've really gotten fond of these MAX strategy setups because they've been pretty successful. And I know a significant number of you like to see Forex trades, so I try to comply as often as possible. Here's a moving average cross or MAX strategy setup for the Kiwi Loonie pair. Just to make sure everyone's up to speed, the MAX strategy consists of the 100 period simple moving average right here in blue and the 20 period exponential moving average up here in purple. What we do is if the 20 EMA is above the 100 SMA, then we only take buys or longs. If the 20 EMA is below the 100 SMA, then we will only take sells or shorts. In this case, it's obviously well above, and this pair has been in a nice uptrend for some time. It's now pulled back behind the 20, and it's consolidating right behind the 20 here. So we are going to look for a close above the 20 period moving average to go long. So at the risk of repeating myself, here's our trade plan. We will buy a daily candle close above the 20 EMA. On the breaking candle to enter full-size position, we want to see this volume bar reach up to at least this volume average. If it doesn't quite reach the average but does reach 75% of the average, I'll open a half-size position to reduce risk. You can calculate the percentage by dividing this volume by this volume average, and you should get at least 0.75. If you don't have at least 0.75, then stand aside on the trade. The stop loss will be 1.5 times the ATR. The first target will be 1 times the ATR. So the way that works is you get your candle close above the 20. That's your entry point. At that time, you look at the ATR. You multiply that by 1.5. You measure that distance behind the entry, and that will be your stop loss. Then you measure 1 ATR above the entry, and that will be your first target. If after entering the trade, the candle closes back down here below the 20 EMA, we'll take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout above the 20 should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we'll close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. Now, these two rules are the very definition of cutting your losses and letting your winners run. Typically, I do this using 2 positions. The first position has a stop loss and a take profit. That position will close automatically when the first target is hit. The second position will only have a stop loss, and that's the position that will be allowed to run. When the first target is hit, we will have to manually move our stop loss up to break even on the second position. I will only risk about 2% of my account on each trade. And that's the setup on the New Zealand dollar Canadian dollar currency pair. Remember, my intent here is to tell you how I manage these trades. If you've already got a good trade management plan, use it. Things that work for me may not work for you. You have to understand your own mind to find the best strategies for your trading. And that's my intent for the trading maxims as well. To help control my emotional impulses and keep me on the straight and narrow path. A maxim is a general truth, fundamental principle, rule of conduct, or a proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. And today we're going way back near the beginning. Tim's trading maxim number 5. A line is never just a line, it's always a zone. Are you sick of hearing this one yet? There's a reason I stress this. You know, I stress points that were areas of weakness for myself. This was one of those. I spent a long time trying to trade exact touches of trend lines and support and resistance lines using stops that were like, oh, a pip or two past the line. So I was buying or selling 1 pip ahead of the line and taking the stop 1 pip past the line. I'm not sure why I thought that would work, but being a bit OCD and a math guy, I wanted everything pretty and precise and exact. Well, gang, it ain't. How's that for some good old southern U.S. slang? Actually, I guess it probably extends beyond the southern U.S. since I learned it in good old Chicago, Illinois. Anyway, I digress. A few months ago, a subscriber commented on a great way to help me explain this concept to you. A line has a zone of influence. The zone of influence can extend a few pips on either side of the line, up to 10 pips or even more. The price will turn before it touches the line or push through it and turn way past the line. So remember that when price is approaching the line as well as when you draw a line. It's never as perfect as you want it to be. Remember our daily Kiwi Loonie trade plan here. We're going to buy a daily candle close above the 20 EMA. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR and your first target is 1 times the ATR. And remember to click the link below to the trade management video for more details. And of course you want to sign up for my free Trading Picks email list just to be sure that you don't miss any of these great picks. I send out about 3 or 4 trading picks a week from all different markets and you'll get to see them first. And the best thing is, it's free. I'll put the link below this video. Be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. Don't hesitate to ask any questions you may have. I'll either answer your question in the comments or in a training video or both. And remember, the only stupid question is the unasked one. Also remember to like and comment below if you want to see Trading Strategy Guide's new twist on the London breakout strategy. As always, thanks for watching, thanks for subscribing, and don't forget to hit the thumbs up below. Have an awesome Monday, and I'll see you on Wednesday.